Hello?
Hey,
Hey man, how are you?
good. How about you?
Excellent, excellent. You're the first guinea pig. Friend, participant,
Uh-oh.
subject, all of that, all of that. Why am I not like split screen view? Uh, Full screen. Okay. There.
Click on that.
Uh, uh, uh,
Go to gallery.
Okay. Sorry, I am after all a 56-year-old man, and I occasionally do show um, the inadequacies of my technological awareness. So, dude, tell me about what's going on with you right now. Are you like in your senior year? You're wrapping up?
Mother's Day is graduation.
Mother's Day this year's graduation.
Yep.
Awesome. And when do you start the gig in Wisconsin?
I gotta finalize some details, but I gotta drive up there, and it'll be right after that.
So like you graduate and you're off.
Yep.
Wow. And what's going to be your gig there?
Um, Basically an intern,
Okay.
learning experience. You know.
So
Um,
but are you going to be Albert Einstein is in the house. um and oops, someone else is joining. I think I let them in. Yes. Yes. Hello. Hello, that's Irene.
Hey
Um
there, everybody. Let me
hey,
just turn off my background.
Ali, okay. Yeah, let me ask you to unmute. Ask to unmute. Hello, Ali, can you unmute? I'm asking him to unmute. And
What's up,
hello.
man?
Hey,
How
how are
are you?
you?
Good, man.
Good, good. Excellent, excellent. You ran away, but that's okay. Um, how are you, darling? Irene,
Good. What's
I
going
will
on?
refer
How's
to
your day?
you as darling.
I'll take it. I like it.
Yes. I
I'm
don't
into
call
pet names.
penises darling.
Why not? That's
I don't
sexist.
know. This is the first time I've hosted one of these. I keep forgetting that there are people knocking on the door. Okay. And all right, awesome. There he is, emergency room doctor, savior of the unwashed masses. Um, Sasan, speak so we can hear you. Unmute
Not
you.
yet.
Okay, can you hear me
Okay,
now?
awesome. Okay, and if everyone can unmute, because I'm just gonna the rules are basically we're a small group, and I think two people. Let's see, admit, and am I admitting you? Yeah. Okay. Whoops. And yes. Okay. Awesome. So here we all are. Everyone, please unmute. Um, yeah. Okay. I'm assuming everyone has. How do I get rid of this thing that's in the middle of the screen? Please go away. Okay. Okay. Oh, okay. All right. That's fine. Okay. Hey, I'm sorry. I'm also working on a Mac, and this is the first time I've ever hosted one of these things. So it's, yeah,
You're doing great.
a lot of that. So thank you very much for coming. And I wanted to see if this could be like the beginning of an exercise in groupthink, because I think one of the wonderful things about everyone who's in this, who's here, and those that haven't joined us, is that we're really very creative thinkers and we all see the world in our own slightly skewed way, and we definitely all add something to the party. I'll kind of act as the host and moderator, but I really want this to be about you guys, expressing, as Pink Floyd said, your doubts and fears and more.
Mhm.
So why don't we just go for it and see what happens? So essentially, I just kind of wanted to start with a quick recap of where we've been, what the market's kind of been happening in right now, and where we are, and what's potentially ahead. We all kind of experienced this GameStop clusterfuck. And, I'm sure a lot of people are still kind of experiencing, like, what was that? Was that something? Is that something to think about? Should I take anything away from it? Blah, 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 all of that. In the theoretical, we can spend a lot of time talking about it till the cows come home, and we can all feel smarter, and we can potentially gain stuff from it. And, as an exercise, that has worth. But in terms of, are there things that I now need to consider because of that? No. In fact, the overarching takeaway is don't invest in shit. Okay? Do not be on any side of a shit trade. What is a shit trade? A shit trade usually is something that involves a company that is certainly worth less than $25 billion and always worth less than $10 billion. Unless you somehow find yourself in it for whatever reason, as was the happy accident with a couple of us who were in AMC before they got caught up in the GameStop shit. Great. That was very fortuitous. But if you see it happening, even if you thought about it, but it has started, do not try to get on. That's it. The train has left. That train has left. And, for the folks who are in this room right now, it's not even the kind of thing where you can be like, okay, well, I missed the run up in GameStop, but it's at 450 now, and I know that thing is going down. I'm going to buy puts. No, okay? For the foreseeable future, the people in this room, and in this, even in the larger group of 12, I would say there are two people who I feel very comfortable with taking like my most extreme positions and mirroring them. Everyone else, I send that kind of stuff out. First of all, I always include a warning. And second of all, it's basically as educational. Learn from this if you have questions to understand how to do it. But it's like you got to get like 6 months, you got to get your feet under you and understand things. And it's part of the understanding, but there's certain things that, even when your child is a genius, you're still not going to give them the welding equipment. You're going to be like, okay, all of that. So the market has gone through its GameStop, blah, blah, blah. But this week has kind of been really what my text yesterday was. Hey, market looks like it's calm. We're going to make some money. And that's where we are right now. The market is in a calm, quiet place. A lot of the stuff has been laid out. You're not going to have another GameStop. The big point of friction right now is potentially what is the stimulus going to be? And in about a couple of weeks, earnings season will end. And there's always a vacuum. Not only is it nature that abhors a vacuum, it's the stock market that abhors a vacuum. So there's like a couple of weeks where things can seem off kilter, which can create opportunities also. It's all a matter of perspective. So that's kind of the lay of the land. For the foreseeable future, this is a good time to enter positions, okay? Especially if you're building on already what you may have. Fundamentally, regardless of any blips, the market will be moving up long term. And when I say long term, I mean 6-9 months. You know, there's just so much runway and so much money. And, you know, what we really have to remember is stock markets thrive under Democrats, and that's where we find ourselves. So that's my perspective on things right now. And as I said, there's not many of us. So everyone unmute, everyone go. If you start to talk over each other, I'll be like, okay, hey, so-and-so, you go. So ready? 1, 2, 3, you guys talk.
Okay. I'll start.
Okay, Irene.
So I am going to be entering some new positions shortly. I have, some money that I'm putting in that I want to allocate at some point. I'm trying to do some research and figure out what I want to go into. I have a few things in mind. And before I talk about where I'm considering entering, I do also want to state that I have 3 shorter positions that you know about with with Space, VSAT, and IRDM. They are months away from.
What kind of positions?
They're like till June and July, so they're
Right,
going to be expiring
shorter,
months away.
Right, shorter option
term
position, shorter term, right? Yeah.
Right, and so right now, basically.
And by the
all
way,
3 of
everyone,
them-
if anyone says anything that you don't understand, please feel free to interject right then and there. Go on, Irene, please.
Okay, so right now, all 3 of those positions are well over 100% on my return on them. So I have started to apply stops on them. And the one that I think is most volatile is the SPCE one. So I think that one will probably get stopped out, like probably I would say sooner rather than later. So I'll have some more cash to put in. So number 1, I don't know if there's a general rule, but what I've done is apply stops at 30% below where it closed approximately, just to give it room in case there's volatility. Is there a better way of applying stops than that?
Is there a 2? You said 1.
Is there what?
Is there a second question?
Oh yeah, the second question will be about where I'm gonna be putting that money once
Okay,
those are stopped out.
So regarding where you put the stop, a lot of these things are really your personal threshold, and it's also like it seems you've already made the plan, you're going to get out of this position, you're going to be investing into something else. So you've already written the story, you're getting out of the position. Okay, so you should decide that for you, it's all about finding the next position. That's going to be the trigger for when you sell this. So the approach can be, okay, I want to have a stop that's, if it drops that much, I'm still making a lot of money, but I'm playing it safe that, it gives me that cushion that it may not drop that much. And it gives me more time to find the next position, and it's appreciating, and that will maybe get me more of the next position, or might even change the position that I want to go into. Cool. Awesome. Quick follow-up, like where you would put that in. What are some of your thoughts?
So that's the next step. So I've been looking into things about where I want to put, I was limited in the money that I had to put in initially. So I put into an allocation that I felt comfortable with. There are other interests that I had that I didn't enter because I just didn't have the money for everything. So a couple of the places that I was interested and still am, are the very base, the like gold star ones, like Microsoft, Facebook, and Apple. I feel like those are probably are they still good positions to be in? I know your view on Apple, always good, and to keep getting more Apple. So that one we don't have to go on, but Microsoft and Facebook, is it still a good time to get
everything is a question of what you're willing to pay. That's what everything boils down to. I might look like I'll look at Facebook or like Google. I'll use that as an example. I'll look at Google, and it's like I finally became a believer. I was like, you know what? Okay, I'm sold. So they're trading at around 2,000. I was looking at January 23, the 2800s, which were the furthest out, and it was an insane amount of money.
I know. I looked
I can't buy Google. I'm not going to buy the shares at $2,000 a share. because I mean,
Yeah.
I was able to somehow convince myself to do that with Amazon at over 3,000, and I can't bring myself to spend that kind of money on a per share amount. And at the price for options that they're asking, it's also too freaking much, you know?
Yeah.
Now, a friend of mine bought 3 Google options a couple of months ago. He's unfortunately not on the call with us because he's got little kids. He bought 3 contracts. You know, for me, I'm like, I don't want to have 3 contracts. That's nothing. But on 3 contracts, he made $56,000, and that's real money.
Right.
You know,
Yeah.
I mean, but each one of those cost him quite a bit of money. So it's really, you have to find your own pain threshold. Those are great stocks, but sometimes they're not the right stocks at the right moment. All right, moving on. Next. Okay, I'm going to pick on you because I know he's got to go to work and save mankind. Sasan, go.
So a couple of things. I know that you like to stay with the kind of gold star companies. So the Fanta companies. If I'm poking around and I see stuff that looks like it's going to do well, I know you think it's always better to get options, but if the equity is cheap, is there any reason not to just get equity? I know that if it goes in the right direction, the equity has the advantage that it'll go up, down, up, down. The option has the advantage that it
What's the
is
price?
multifold
I'm
the
not even
money
going to ask
or the
you.
loss.
I'm not even going to ask you what the stock is. What's the
I
price?
found I found like 10 things last night researching it, like, when
What's the
things
price?
quieted down a little bit. So, anywhere between like $17 a share, I would say, would be
Okay,
the average.
too much.
And then the options
Too
would be
much.
in the cents.
Too much. Yeah. Like there are certain stocks, like for instance, that Swiss pharmaceutical stock, it's 50 cents. You know, Lloyd's of London, LYG, it's $1.83. You know, small stocks like that, small stocks with real companies, but in that sense, yes. But if a stock even gets up over $5 or $6, unless for whatever reason you want to hold the stock, and if you listen to that Mark Cuban thing, there's really no reason to own a stock unless it pays you a dividend. You're not holding it for anything other than the appreciation. So why are you holding something that cost you this much when you can hold something that cost you this much, but that has this much punching power? All right,
No,
cool.
so I mean, so
Any
then why do
follow-up
we?
question? We'll consider that one question. I'm sorry.
Well,
I'm
I
trying
have
to
one
keep it
follow-up
within a
on
time
this.
frame. Give me one more. Everyone gets 2.
This is my second one. So then why do we have the Fanta equity? I mean, it may be a good idea for me to sell some of that equity and get it all in options.
Okay, you know what? Fanta was the starter. It was kind of what got you comfortable with stepping into investing. Okay, and it worked for you and a couple of other folks. For other folks, it was a step that kind of had to be bypassed simply because those stocks cost a lot of money. And to open a position in those stocks, by the way, Fanta, and I think I've told you what Fanta is, but just for everyone who's there. And Isaiah, hey, thank you very much for joining. I hope you're unmuted. Fanta is Facebook, Amazon, Nvidia, Tesla, Apple, and it's actually Fanta Plus, where the plus is a financial institution. And, but a lot of those stocks are very expensive. And if you're starting out with $20,000 to $50,000, you can't really open effective equity positions in those that will allow you to learn some of the lessons that I need you to learn in order to be comfortable taking on a certain level of risk while experiencing outsized appreciation. So that's why. Does that answer your question, home caller?
Training wheels. Got it.
Exactly. You threw those fuckers off a long time ago, Sasan. I'll tell you that for sure, my man. Okay, next, Rob, go. You've been sitting there very, very patiently. Thank you.
Yeah. Hey, so I got a question that kind of follows up a little bit on what Sasan is talking about, because I
Awesome.
think I'm in a similar position as him, and I'm coming in a little bit later. I don't know how long you've been working with Vadim, but I've known Vadim for a long time, but I've been
Yes.
working with him for less than a month. And a little bit of background on me quickly is that I primarily was in equities, wasn't trading options at all. So Vadim's kind of walking me through the motions, and I've got a small amount at this point, but my intention is to move more. So my question for you, Vadim, and following up on what Sasan is asking,
Yes.
is what is the balance of equities versus options that you would recommend for most investors? And particularly thinking in sort of our age group, Sasan and I, over 55, right? So
Right.
somewhere near retirement. What's your
Right.
thoughts on that?
Right. You know, I don't know if you had a chance to watch that Mark Cuban video, but it really is very much worth watching. Because what he keys on is basically there are two reasons to own stocks. One is for dividend reasons, because they pay you something. And the other one is because for whatever reasoning you've gotten behind to buy that, the appreciation, you know, we all buy stocks because we hope to sell them for more later, you know. The same thing applies to options. Now, if you treat options the same way the vast majority of people who are in options treat them, where what Irina referenced as a short-term options of being expiring in June or July, actually being so far out and so long-term for most people who trade options, because they're really buying the short-term ones, you know? So for them, why would I own something? I'm in and out of these things all the time, but I'm not. You know, I don't want to say I'm not. That's never my intention. You know, the AMC options that I just sold, I bought them with the intention of holding them for 2 years. But then fucking shit happened. And I was like, wow, it's like 300 times what I thought was going to happen in 2 years. Why? What am I waiting for? Okay, hallelujah. Let's go. I'm out, you know? So it's, you know, I don't know. For some people, it might be, you know, my dad, he had the certificates, which you can still request be printed and sent to you, unless you have a sentimental reason. I don't understand why you would not have reasonably priced long-term options instead. You know, it's all about being reasonable in what your expectations are. I, for a very, very long time, would be incredibly unreasonable because I wasn't driven by, can the stock actually reach that? I was driven by, I've got this little amount of money. What's the largest amount of contracts that I can buy? So if a miracle happens, I'll make some money. And oh, let me buy it for a month because hey, a lot of strange things can happen in a month. You know, no rationale, no nothing. You know, now everything that I'm in, I can certainly explain why I'm in it for whatever the rationale may be. You know, and that's because I think, Rob, as you said, you just got into options, but I think you can see how much those have appreciated, and I'm pretty sure all of them have to some degree, versus you know how much the stock has appreciated. You know, on that basis, and that's the whole thing with options versus equities, is that over time, I really genuinely believe you're taking the same amount of risk because unless you are way beyond your strike price, there's no reason to hold it until the very end. You know, some of my big losses this past year were because I didn't hold it until the very end. I had Ubers that expired in January at the strike price of 50. Up until like December or November, it was trading like in the 40s and kind of wallowing, and I was tired of holding it. Plus, I had another set of Ubers that expired next year. So I was like, fuck it. Let me sell these. I'll take the loss, blah, blah, blah. I have these others, boom, boom. Then it caught fire at the very end. And I would have made money, woulda, shoulda, coulda, blah, blah, blah. Who cares? I didn't. Okay. I got tired. I felt, you know what? If I hold it any longer, it's going to end up being zero. And sometimes I don't care when it's like 10,000 and now it's worth 2,000 and there's like a month and a half left. Do I go, let me save the 2,000? Or do I say, let's see what happens? It's a 50-50. So that could have gone either way. For whatever reason, I woke up on the wrong side of the bed, whatever. I was like, I'm fucking tired of being an Uber. Boom. You know?
So not really a percentage then, right? I mean, I think what
No.
you're saying is you might as well be in options because you can make more money. Is
Yeah.
that true? Is that true in a static market as well? I mean,
Yeah.
the market, I mean, the market's been great the last couple of years. So what is your feeling if the market, and I don't see it happening this year, but if you expect the market to get a rate of return that's more in the like 7 to 10% range?
You know, I don't expect.
Options
Okay,
seem like a good bet right now. I agree.
Here's the answer. I always expect to outperform the market. Okay, because I do. Now, unfortunately, sometimes I outperform the market to the downside. You know, and that happens also, but far less than the other way. And options will always outperform because what happens is when you buy them long enough, even in a static market, and sometimes even better in a static market, the stock will catch a bump. They'll announce something. It's like what? Apple isn't going to announce something needle moving at least once a year. So even if it's moving sideways, at least once a year, it'll be boom. And that's the time where you go, okay, it kind of has been sitting still, and now I'm up 50%. I've got 4 months left. Do I want to keep riding it? Do I want to get out of it? Do I want to take some of it out of it? You know, and those are all personal decisions. I can give you all sorts of benchmarks. I can give you all sorts of pithy sayings, but what the fuck's the point? You know, it's up to you to pull trigger, and you pull trigger when you're comfortable, and that's it. Okay, cool. Let's go around and we'll see if we can get to new folks. Wesley, you're the newest member. What have you got? Let's hear what the next generation is thinking.
So a little bit about me. I just got in with Vadam because I was texting him about some stuff going on in the market, and me studying economics in college. He's like, stop being the economist and get in the market. So I'm still trying to figure out where I want to go with this. But to go off the options and stuff, what's the shortest options you hold now? Like purchasing for the future?
Okay. Right now, I do have some very short-term put options, which are bets to the downside for instance, a stock that Irene mentioned, SPCE, which is Virgin Galactic. It's been running like crazy. So I bought short-term puts to, provide a hedge against retracement. But generally, when I buy stocks, I try to buy them at least a year, possibly 2 years out. I tend to like January expiration dates. It keeps it easier to, makes it easier to keep a track of. And then you just have to remember the year. You don't have to remember the month and the year. But sometimes I'll find myself in shorter term duration ones, largely because those are the only ones available and I bought the furthest one out. Again, like what Irene said with some of the space stocks that we've recently been looking at and investing in. What else you got, Wes? Did that answer it? Or I don't know.
Yeah, that answered my question.
Cool.
I can't think of anything else off the top of my head right now.
All right, man. No worries. Let's go to Ali. Hello, Ali.
Hi, Bottom. My name's Ali. I'm a friend of Bottom's. A long time listener, first time caller. Bottom, I still don't understand options. That's how new I am. Can you just give me like a cliff notes about options? 30
Okay. Okay, what is an option? And everything I'm saying has an upside and a downside. I don't mean in terms of what can happen, but you can buy options to on the stock going up, and you can buy options on the stock going down. I'll tell one story, but it can be applied to both. Okay, an option is something that allows you to place essentially a bet that a stock will be at a certain price by a certain date. Okay. And depending on the date and depending on the price, that will, drive what you're paying for it. But an option will always cost far less than the stock because you don't own anything. You're essentially betting on the right to buy that stock at a future date at a certain price, blah, blah, blah. And those are basically things that happen that explain what happens when you run into the wall. But I don't run into the wall. I stop running before I hit the wall by liquidating my position before the expiration date. So I don't worry about that. What I worry about is just like with the stock, it going up. And because I buy something far out enough, I use the cover of time to offset the volatility. I give myself time to get to where I want to go. I had a thing that so basically what an option allows me to do, and this is the key to why I use it, is it's really a tremendous magnifier of your nut, the money that you've got. And when you start out with no money, you want to be using options because they really allow you to step up. Now, the problem is when people first find out about it, it's like people like GameStop or even younger, or hey, it's the same thing when I was that age and doing it, I had like $2, So I'd be like, okay, what can I buy? I can, I have this stock, it's at $2. Okay, I'm going to buy these options that expire this Friday that say it's going to be at $5. Why is it going to be at $5? I don't know, because something good will happen. Okay, comes Friday, I've lost my $2, end of story. And it took me a long time to figure out that, hey, fucking idiot, stop expecting shit to happen tomorrow. Give yourself plenty of time, because you know what happens? If you expect it to happen soon, it always takes longer. And if you expect it to happen in a long time, it always takes less time. So fucking expect things to happen in a long time and then always be like, woo, that worked out well. So that's what an option is. It's a way for you to magnify a little money, make a lot of money, and then understand and feel more comfortable with the concept of being in control of your money. And you start to feel control of it as you are in control of its growth and you understand what you're doing to make it happen. That's, options, of course, can be explained in a very much of a mathematical, technical, blah, blah, blah way, but that's not why you buy them. You're buying them. Options are momentum. Even if I'm looking at something 2 years out, I believe that this stock will maintain a certain level of momentum over the time frame that I'm getting into it to hit a certain price. And because of my knowledge of that stock and everything else, that's what I do. And an example that I give is, hey, you buy a stock for $100 today of $10,000. You buy 100 shares. That's what you got. In a year, the stock is $130. Okay. You've made $30 a share times 100. That's $3,000. Not bad. Okay. Option, $10,000. Stock is at 100. You say, I believe in a year the stock will be at 120. And for that bet, I'm willing to pay $5. Okay. So you paid $5. Now comes January of next year. The stock is at 130, same 130. Okay. The option that you paid $5 is now worth $10. Why? Because you said that the price would be 120, but now it's 130. Okay. Now, oh, what I forgot to tell you is, well, shit, how many options did I buy for my $10,000? Okay. You bought, it's at 5. Okay. So 10,000 divided by 5 is 2,000. Okay. 2,000 options. However, options are not sold individually. They're sold as a contract. And a contract, a single contract, is 100 shares. So you bought 20 contracts that allow you to, in that future date, convert that to ownership of those shares at $120, regardless of where it is. Okay. But you don't want to own the shares. You just want to pocket the difference. So you paid $5 for 20 contracts of 100 shares per contract. You following me, Ali? Ali?
Yes, I'm listening.
Okay, you're following me. Awesome. Great. Okay, so now next year, the stock is now 130. You bet 120. 130 minus 120 is 10. So now you collect 10. Okay, but you paid 5. So 10 minus 5, 5 is your profit. 5 what? 5 times 20 contracts. Okay, that's nice. 5 times 20 contracts is 100. But each contract is 100. 100 times 100 is 10,000. So you made $10,000. You doubled your money. What you paid $5 for is worth $10. You doubled. When you bought the shares, you made 30%. Here you made 100% with the same amount of money. However, the best part is that's what happens if it happened at the end. However, if in the middle of that time frame the stock was at 130, what you paid $5 for, let's say you still had 5 or 6 months left, that $5 would probably be worth around 20. Because there would be plenty of time left and you've already exceeded, the target you were shooting for, et cetera, et cetera. But okay, I hope that gave some clarity to that. And of course, Ali, I would love to address that in further detail with you when you want. All right, let's go to our last guy, Isaiah.
Bottom, I gotta run, unfortunately.
Okay, I'm
A
sorry,
couple of things
Sasan.
I gotta-
Thank you so much
No,
for
but
joining
I
us.
love you guys. Yeah, thank you for having this. It was nice meeting everybody, and I hope I see
We're
you guys
gonna
all
do
soon.
it again, and hopefully
Nice
at
to
a
meet
time
you.
when you're not saving people.
I'm in.
All right. Love you, my
Delaying
friend.
the inevitable, actually.
Yes.
Love you too. Mwah.
Mwah.
Bye.
Yes. All right, Isaiah, go.
Hey, thanks for having me. Hope you can hear me well.
Yes.
I got a question about what's your feeling on taking out option contracts on OTC market stocks? Anything on the pink sheets? Are you concerned
None of
about
that
that?
crap. No, never, never. To be honest, my screens start at 10 billion valuation. And even then, I really have to be fucking convinced. AMC was just like a miracle because I bought into the story that was being told about a streamer possibly buying them, adding them to their value add. And I thought that was a completely believable story. And I somehow got into it, a couple of days before it got caught up in the GameStop shit. But normally, no. Normally, I believe there's so much money to be made in really companies that are 100 billion or more, that you can just totally measure your risk and really sleep easy and, buy 2-year bets. And, sometimes you just catch something where it's like, whoa, I was expecting 200-300%, but look at that. It's up several thousand, shit happens and you're still placing the same bet. And why not give yourself at least the opportunity to get long-term capital gains? That's why I buy 2 years out. So, hey, more often than not, I actually do hold it for a year. And then, you save a whole lot of money. So hey, no to
If
the
you
OTC
maybe-
and none of that crap. You
So
don't need
not
What's
even for,
OTC?
any quick one follow-up?
well,
What's
someone asked,
OTC?
What's
What's
over the
OTC?
counter? Over the counter, it's like there are many different exchanges, and over the counter or things like that are really where it's sharks. There's a lot of sharks, and a lot of the time, the people who are sharks just end up getting eaten by bigger sharks. So you're eating or getting eaten, but eventually you're getting eaten.
yeah, if
All right,
for the
let's go
follow-
around again. Wesley, did you come up with any other questions? Because we're going to wrap it up, but I know you only got one in. Do you have any others?
No, I'm good for this week.
Okay, awesome.
till the next
Anyone
time.
else with anything else?
if you'd permit me a follow-up.
Okay.
So today I brought two equities to hold, right? I brought a Drive, ticker symbol DRIV for the autonomous vehicle,
Uh-huh.
and IEMG, right? Emerging market, right? And so I'm thinking about calls.
What is
putting out
IEMG?
calls.
Is that an ETF kind of thing, or what is that?
Yeah, those are both
Okay.
ETFs.
They're both
Yeah,
ETFs. Okay.
both ETF, IEMG, emerging market ETF.
Right.
And so I'm looking at their calls right now, right? They have a 200. So ordinarily I'd be DTE 30 days, 29, but I hear your philosophy and it makes sense, extending out a year. It sort of
Right.
takes the pressure off, right? I
Yeah.
totally dig that.
Yeah.
And so I'm looking at their calls right now. They got 225 days, 100. So I'm thinking about the calls on
Go the
those
furthest
ETFs.
out. Go the furthest out.
Right.
I mean, listen, the worst thing that happens is in a month, it's like, oh, that's dead money. Let me move it to something else. Whatever.
Okay. Okay.
Or you just test it out and be like, okay, hey, let me hold this one. Let me hold this one. I mean, look, my philosophy is also, hey, if it drops, but the story is still good, buy some more. Okay. If you're like within a couple of months of expiration, which for you might be like a couple of months, that's gigantic time. But for me, if I'm a couple of months away, I'm like, like the Uber thing. It's like, okay, I'm either up a chunk and it's like, do I want to start paring back, before the expiration? But usually if I'm up like a shit ton and it's not dropping, I'll just kind of wait, but if I'm under, then it's like, do I want to let it go to zero? Am I at the point where I'll just, maximize my capital loss, or what? But give yourself time, don't worry about rotating the trades. You're not gaining anything by coming in first in frequent trader, class. So just, and my thing is, I don't need to find the obscure ones. Like this is part of the group because a lot of people look for stuff where I'm like, no, I have no comment. That doesn't mean it's a bad idea. I just have no comment. I have too much shit on my plate. I'm happy to share what's on my plate, but I can't really put other stuff on it, but you guys can certainly bring it here and discuss it and other people can validate and blah, blah, blah. And you can, great. Awesome. So that's my dream. But, okay. So one last question to anyone, and then we'll wrap it up. Of course, feel free to send me any comments of any of this. And please let me know, like, if this format is cool, if you felt you got to say enough, if you want to maybe pre-send your questions so I can be like, okay, hey, first let me address blah, blah, blah. Whatever you think would make this better and value additive, that would be awesome. So last one thrown out there. Anyone?
Irene's got one.
Yeah, all I want to say is what I'd like as a suggestion for future calls. This was great, like for an intro call. I think it's good to like see where everybody is and where we're all starting out and kind of where our heads are.
Right.
But I'd like more ideas on like, what should we do with more money? Like, let's talk about a company. Let's talk about positions. Let's talk about why. Like, that's
Right.
what I'd like to see. On
Well,
future
okay.
calls.
So that's up to each of you to bring, I mean,
Okay.
shit. if we've got 5, 6 people here and you're each talking about 2 of that, that's 12 freaking things. That's a lot of shit to cover,
Yeah.
you know? Secondly, everyone's situation is different, you know, different levels of money, different experience levels, all of that. And we don't really want to spend that much time. We want this to be information that's put out, as I like to say, you know, on the highest denominator, not the lowest common denominator. We want to rise up, you know, rather than, you know, dumb the shit down, because none of us are stupid and we'd all get bored with that. So I definitely want you to bring the shit, you know, bring the shit, because at these things, I'll be texting all of my stuff to you guys as I do.
Yeah.
So you'll know you know, and all of those will be like, hey, this is what I did. This is why I did it. So this isn't like an opportunity for me to recap that. You know, it's not like, well, let's go over what I did so I can tell you again what I did. You know, it's like, dude, this is for you. If I can help address things, facilitate things, or otherwise, you know, like right now, of people present here in terms of EV and environmental shit, I'm not the guy. But Rob is very knowledgeable in that area, and he can certainly shed light on things. You know, pharmaceuticals, Irene, awesome. You know, Isaiah, I'm sorry, I'm just meeting you. I don't know where your strengths are. Wesley, even though he's a youngin', you got automotive questions, I'm sure he can shed light on stuff. And Ali, anything entertainment related, you know? He's an industry veteran. Other folks that'll appear, you know, and I think what would be good is I might just send this out there and ask people to let me know like their best times, so I can then just like cross-reference what people's times are, because some people, you know, I can do Mondays, other people, you know, whatever. So we can do that. Plus, as you know, Zoom allows me to record these things. So it's recorded and I'm going to post it for us. And then the larger group can see it. And then, you know, first of all, it gives you an opportunity to see what was discussed and, you know, cross-reference stuff, as it were, and use it to, you know, to make all of us better and stronger. So awesome sauce. I really appreciate it. And okay, and one last time, because Zoom gives us 40 minutes. Anyone else want to go with anything?
Yeah, I'll ask a quick one because I was asked this question today by my wife. And so I'm curious what your thoughts are on the on airlines. They're certainly they're big companies. They've suffered a bit. They've gotten some financial help. We know what's going to happen. I think it was American or something is talking about their funding running out. Anyways, long-term position, or we'll say 1 year. What's your thought on airlines and the comeback of airlines as we pull out of pandemic? Any thoughts?
It's a very,
Don't
very
you have
difficult.
holdings in American?
I actually got out of them, like I think this week or last week, because I was like, I don't need to be in this thing anymore. You know, there's something called enterprise value. And a lot of the time people look at that number and, you know, it sounds pretty good. Well, what's your enterprise value? And if you go,
What is
my
that?
enterprise value went from 10 billion to 20 billion, you're going to be like, fuck, that's awesome. You grew your enterprise value from 10 billion to 20 billion. But what that is also, it includes your debt.
Yeah,
okay.
Right.
All of these airlines have increased their enterprise value tremendously by taking on insane amount of debt. Now, are all of them too big to fail? I don't know. Some of them are. Some of them are, you know. But while I think the government can see there being either a way to consolidate the airlines, or if one of them goes under, it'll still be okay, they may let the market play out. But, you know, at this point, I don't even know. I either have sold my Boeings or I'm thinking of getting out of Boeing. And that was my all-encompassing airline play on a global level. You know, it's going to be a long, hard road. It's going to be a long, hard road for them. Business travel, that's a huge chunk of business that's the biggest question mark. It's not a question of how soon will it be to recover. It's more a question of will it ever? You know, and the business traveler was the one paying the premium fares. It
Yeah.
didn't matter how much I have to get there, you know, but here we are. We're on this, you know.
Yeah, and I think it's even the bigger question of when it will return, right? I mean, it's going to return.
When?
Business travel is going to return, but yeah,
I
I hear
mean,
you. When?
Look,
And what
everything is
scale?
worth a bet. Everything is worth a bet. But the second question is, are there better bets that I can be placing with the money that I have? You know, there's always, if you've got enough, you can place a bet on everything. You know,
I got you.
Could I give 2 cents on Boeing? Because I'm a holder of Boeing also.
Yeah.
And because I agree with you, you don't hold it unless it pays a dividend, right? Like I'm a holder of Microsoft as well. I get a good dividend there. But really, and I agree with you also, it's sort of undetermined if and when airlines will come back. But Boeing specifically, if they do come back, they have the most 737 MAX exposure, which has now been sort of approved by the FAA to
Until it
be
crashes.
put online, right? So they're in a good position to sort of, if it does come back, to
Yes.
take advantage of that.
Yes. You know, there are certain stocks that every time I've been in them, the story looked really good and then I always got fucked. Boeing is one of them. You know, I'm on the second round of losing options at this point, you know, and, you know, I talked myself back into getting into GE, which has just been, you know, treating me like a prison convict for the last couple of years, you
Why
know,
did you
but I
do
was
that?
like, okay, hey, I'll give it a flyer.
What made you do that? You mentioned that the other day, and I was curious what prompted you to get back into GE?
You know, because I got tired of waiting. I got tired of waiting. And the last report, you know, they've just been climbing. It was like, I don't know, maybe it'll be like, ha, motherfucker, got you again, you know, where I just was like, okay, you really look like you've got giddy up this time. You're not going to fade back. You've got positive cash flow. Larry Culp, great CEO, blah, blah, blah. You know, even like their biggest analyst downer guy is kind of saying, well, there might be something to it. If they can get some of their major divisions going, one of which happens to be aviation, you know, if they can get that shit going, that'll be awesome. But that's why I'm giving it 2 years. And I essentially bought in the money calls. They're trading at like 11 and change. I bought January 23, 12 strike price, you know? So I'm there. Now I just needed to get a little giddy up. All right, guys, this was awesome. And I could keep going on. And I might even have to look into, can we extend the Zoom call limit?
You have to
because
pay for the
more
premium Zoom.
Yeah, exactly.
Premium
exactly.
Zoom.
But awesome. This was terrific. I really enjoyed it and it surpassed my expectations. And I hope you guys did too. So please send me as much feedback and you know, we'll get the next one hosted like, you know, in a week or something and you know, see what happens. Feel free to reach out to me at any time on an individual basis. I know like you, Irina, said you've got money coming in, you're waiting for it to, you know, whatever, transfer, etc. I know other folks are also, if it's like, okay, I've got it, it's available, what should I be thinking about? Let me know, we'll have that conversation, you know, and we'll go from there. All right, guys, much love to all.
Post on YouTube. Make a
Mwah.
channel.
Yes, I
Thank you,
will. I
Vadim.
will.
Yeah.
All right.
Thanks.
Thank you guys.
Right.
Good
We'll
night.
see you soon.
Thank
Bye,
you very
guys. Nice
much.
meeting all of you.
Thanks for showing the faith. Really appreciate it. All right. Much love to all. And